We're a regional bank. We span up from Maine down through Richmond, Virginia on the East Coast. So we're in 17 regional banking regions, headquartered in Buffalo, but our second headquarters is really Baltimore, as I'm sure you guys have seen M&T on the Raven Stadium. So just really excited to be here. As the keynote speaker earlier said, the goal here is to invest in veterans. So we're happy to talk through today how to make that more accessible and really empower you with the knowledge to take that leap to start your company or to take the next growth step. So looking forward to discussing today.
We're going counterclockwise. Geoff, you're up.
Awesome. Good morning, everyone. My name is Geoff Boyle. I'm with Burke and Herbert Bank. I've been with the bank for about 2.5 years. I have a structured finance background behind that. I'm actually the bank's treasurer and chief investment officer. So a little bit different than the two folks you have from M&T and Sandy Spring here. My really commingling with GovCon and other properties and things of that nature is more on the structuring side, the pricing side, and relationship building as well, obviously. If you don't know Burke and Herbert Bank, we're actually Virginia's oldest continuously operating chartered bank. So we've been here in Northern Virginia since 1852, so a little over 170 years. And really over the last 4 or 5 years, we've made a very concerted and intentional effort on focusing on how we can help our folks in the GovCon and veterans in the GovCon space grow their companies, everything from early stage to mid stage to late stage growth. We're in the middle currently of completing the bank's first merger in its history. So we'll be much more sizable and formidable with a 5-state reach as opposed to our predominantly Northern Virginia and Maryland footprint today. So we're looking forward to that as well. And I'm looking forward to joining these other great panelists and talking to you all about capital allocation and how best to work with your bank to get what you need to thrive.
Thank you very much, Marcus. Last but not least, fire away. Whoops, can't hear you. Uh-oh.
We could probably fit one more in here, Marcus, if you want to join.
Marcus, do you want to come to the same room that Emily and I are in so at least we can hear you? Something must be wrong with the connection. Go. Head down the hall.
The more the merrier.
See, and every small business owner knows this is exactly what you got to do if you're starting a business. Marcus,
I feel like I'm missing out. I don't get to sit with everybody.
This is pretty good,
Thanks
actually.
Thanks for bearing with us.
Let's get over here.
Maybe that's it. That's what it was. All right.
Oh, you're back. Okay, Marcus. Tell us about your bank.
Sorry, hold on. I'm getting some video help or some technical help here. All right, fantastic. Thank you. Yeah, good morning, everybody. Glad to be here and join the other panelists. As it's Marcus Perry with Sandy Spring Bank. We're a little bit younger than Burke and Herbert. We actually started in 1868, so we're celebrating our 156th year in operation this year. We are the largest community bank headquartered in Maryland. Our headquarters is in Olney, Maryland, but we do business in Maryland, D.C., Virginia, and all the states that touch those. So we got a good reach and a good grasp on the government contracting sector here. You know, as the others said, I started with Sandy Spring Bank 12 years ago. He was a line lender, made my first government contract loan back in 1998. So I've seen a number of changes in the industry, both on the government contracting side, but also on the financing side. So excited to bring some conversation around this. I know we got a variety of people from startup to middle growth and exit stage. In their government contracting businesses here today. So, love to have the conversation. Looking forward to some questions on that, and really just looking forward to continuing to contribute to the government contracting sector here in the Northern Virginia and DC area.
Perfect. So we'll jump into the questions. I think a lot of people on this call are probably fairly new companies, startups, or maybe a few years old. So maybe we'll go around the horn again and talk a little bit about what you all would look for in a new company to bring them on board as a customer. And also continue a little bit on that theme about what might be a red flag. So we'll continue the same order. Emily.
Sounds great. Yeah, and great to see all the new companies joining. I think, you were here really to demystify the process. Just because you're just getting started doesn't mean that you're not going to be eligible for a bank loan. And in fact, there are programs and resources in place between us and the regional banks and otherwise to get you off your feet. So really what we're going to look for when you're getting started, and this is a collaborative approach. So you're not going to have to know everything when you start the conversation. We're going to be there to guide you throughout the process. But a couple of things that we look for is one is projections. So there's templates that you can use. There's templates that we can share with you, but we want to see that you've really thought through what your need is going to be. So when you've just gotten awarded your first contract, whether you're a prime or whether you're teaming with someone as a sub, one of the things you're really going to want to think through is how that cycle is going to align, right? Because you're going to be putting out some money in payroll before you would get that AR coming in. And if it's your first contract, you want to make sure that you aren't experiencing a cash shortfall like right out the gates. So that's one of the things that you'll really be able to work through with the projections, and you'll be able to see that cash need. Alongside of that, great to put together a business plan. You have it all in your mind. To put it out in paper can help us moving all in the right direction. And the other thing that might come into the equation is utilizing the SBA, right? When we're not looking at historical financials, but rather we're looking forward-looking with projections, the SBA is a great tool that the regional banks have in order to support you for that. As for red flags, we want to make sure that we are being intentional with the ask. So through the business plan and through the projections, you're really going to be able to see the flow of funds. When we have someone that's coming in asking for an excessive request compared to what their current state is, or if they're not being very transparent with their financials, honestly, it boils down to just transparent communication. The banks are here to help you. We're not here to work against you. So the more that information sharing that you can do is really going to empower us to be able to tell your story behind the numbers to advocate for that loan that's going to help you launch.
Perfect. Thank you very much. Geoff, you want to pick up on that?
Yeah, sure. So, Emily made a ton of great points. I'll only add a couple of small things. So from our side of things, for me, I think when you're getting started, quality is really important. So quality of documentation, quality of your business plan, to Emily's point, and how you expect to grow and get from stage to stage. We want to work with you and partner with you to form a relationship so that we can help carry you through those stages as your bank. To Emily's point, we don't want to work against you. We want to make sure that you understand what we're looking for at inception so that we can carry kind of that continuity throughout the relationship. So the earlier I think that you can work with a CPA firm, for example, for the compilation of your financial statements, and working with the right legal counsel where necessary, if you're doing an acquisition or something like that, who is well-versed in your space, gives us a lot more comfort and is a big intangible, I think, that'll go into maybe helping in some of the overcome some credit challenges that may be inherent in this space with contract timing, receivable timing, and things that can be just a little bit more difficult here than in a normal boilerplate C&I type structure with a manufacturing business or something else. And quite frankly, a big thing for us too really is just communication. So when you're just starting out with a banking relationship, check in early and often. Make sure that you're talking to your banker about where you are, where you want to be, and how you want to get there. And let us help you get there, because to Emily's point, we have a number of tools at our disposal, whether that's in-house financing, SBA type financing, types of grants and awards that are available in this space. We want to make sure that you're getting the best structure to suit the needs that you have. So the more forthcoming you are with data and your willingness to have those sometimes tough conversations with your banker are likely going to lead to the best outcome for you and the bank, which is what we're all after at the end of the day.
That's perfect. Marcus?
Yeah, they both summed it up very well. I would add on to what Geoff said. We really like to see somebody come in with a good business plan that they really thought through, more than just, oh gosh, I won my first contract, but where is that going to lead you? What's your plan down the road? that you've surrounded yourself with professionals, CPA, attorney. Your banker should be part of that team. We always refer to that as the three-legged stool. That those three components should be working together, talking together, and all singing off the same page. Sometimes you'll get one or the other that's pointing you in a direction that aren't aligned with all three. So you want to make sure that all three of those professionals are really working on your behalf, and that they're all working in the same direction. Again, back to what Emily and Geoff said, communication is really the key. I mean, we can do a lot to help you. We've got professionals that are on staff who've been working in government contracting for 15, 20 years. They've got a lot of experience, and so they bring that to the table as a consultant, and really give the ability to go through a business plan with you, tell you what they've seen in their business lending to government contractors, but also what they've seen from other government contracting organizations, and how they've grown, what's been a success point for them, and probably more importantly, where they've stumbled. And some of the things that we see are government contractors who are growing too quickly and really need capital to come in as opposed to just financing. And that's a place where really your banker can be a great resource for you in helping you to understand what kind of capacity do you really have to continue to grow the business.
That's really great stuff. And I'm going to ask another question before doing that. One of the things that all three of these banks excel at is providing their customers what they need. And we always say, the Republic, we may give you what you need, it may not be what you want. But that's a hugely important issue, because often if you just get what you want, it's like raising children. It may not be the kind of thing you're looking to do. So these three banks are really noted for that consultative approach, and would encourage anybody talking to them to not be hesitant to ask for advice and questions. There is no such thing as a stupid question. Sort of moving forward, one of the things that banks always look for is kind of the three C's: character, collateral, and capital. And a startup business may not have much of the capital, and the collateral is probably receivable. So it really does mean that character piece, and you guys have touched on it a bit, is super important. But if you go a little bit deeper in terms of character and talk about what you see that indicates a particularly good character, and something that may indicate a bad character, so people can be aware of that. So, Emily?
Yeah, absolutely. So I will say every single credit memo that I have for a veteran, under the character section, because we do have a character section, which we're talking about, we put veteran. That is already a huge advantage going in, because we so much respect the work that you guys have done and know the skill set that carries over into starting your own company and being a veteran. So that is definitely something to be highlighted. But beyond that, it's really about that going back to that transparent communication, right? Bankers don't love surprises. We'll find things out eventually in the credit process. So if there's anything that should be known, get in front of it early. Be the one that communicates it and control that narrative, because usually with every not so positive, there's some mitigants that we can talk through and really be able to present that story for you. Because at the end of the day, it's just not numbers, not only numbers being punched into a system with a yes or no. It's a conversation that us as relationship managers are having with the underwriters to, again, tell your story. So also to be able to point to the translatable experience that you have through the veteran experience, but through other things that you've maybe participated in since then, to write about your connections within maybe the agency that your contract's going to be in, helps us to kind of advocate that you're already in the ecosystem. You already have the mentors and the group in your corner is extremely helpful for us as well. And something that hopefully we can build on, because beyond providing those boring banking services, we also try to be a person in your network. So knowing where you are, knowing where you're targeting can enable us to be able to make those strategic intros that hopefully we're going to be the ones that after this that, introduce you to your next teaming partner that's going to help with the next contract win. So all of the conversation just builds and allows us to be a good partner to you.
That's terrific. Geoff, you want to elaborate a bit on that?
Yeah, I think, again, we're a little bit overlap of what we've already discussed, but going a little further, I think that it's really important too for customers to understand the time frame that most of these requests have. So I always tell customers in this space that, we're a bank, but you can't go to the ATM and get a loan, right? So we can give you cash that you already have in an ATM, but understand that there is going to be a lead time, right? There's going to be a component of get in front of your bank early, regardless of the stage that you're in, form that relationship so that when you need capital, your bank's already there. The time to get in front of your bank, and this is part of that character and for, kind of looking forward for your business growth. The time to start a relationship with a bank isn't when you need capital, right? If you want access to capital, you want to have a relationship already started, even if it's not a multifaceted lending, treasury management, and deposit-based relationship. You want to be able to have that already as a stool to, leg of the stool, as Marcus said, to lean on. So for me, that's a big one. And honestly, to be kind of duplicative, it's honesty. We want to have those conversations, and Emily touched on it. If there's something in there, we're going to find it, everyone. I want everyone to just understand that, it sounds like, hey, we're supposed to be a partner. This is a relationship. You don't expect you to act like an auditor. That's not the point. We want you to be forthcoming with us, and we want you to share the good things about your business, but also the challenges. That's going to help us create the way that we describe it at Burke and Herbert, which is really that a la carte approach to you as an individual. We want to create a package from a relationship standpoint in every service that we offer that meets your needs. So if you do have some blind spots in your business, or you have some things that you don't perform well, share those with us too, so that we can help enhance that in your growth, in whatever growth phase that you're in.
That's terrific. Thank you very much. Marcus?
Yeah, I would just add to that. I agree, 100%. We always talk about the C's of credit, and I always say that the most important one is character. The others are all measurables, but if you don't have great character, you can't trust the other four. So it's really a matter of, to me, that's the one thing. I've been in the business for 31 years. The one thing that has never changed is, my consideration that character is the most important of the C's of credit. And that open communication is so important. It's vital to make sure that not only are you getting what you need, but the bank can be prepared. I think to Geoff's point, right? We can't always turn on a dime, and so the more lead time that you can give us, the more kind of advanced notice that you can give us about the direction that your company is heading, the better we can be about assessing your needs and creating solutions for you. I think I think back on my career. The best government contractors that I have are we're in an ongoing dialogue at the very least on a quarter-to-quarter basis to talk about what their numbers look like, and probably more importantly what their pipeline looks like. I think that's something that, particularly for startups, that's a piece that they often miss, is they think about what they've got right in front of them. They know what the contract they have. They know what the funds they need today to fund that their operations between the time they bill and when they're going to receive the payment. But they're not looking out at what the pipeline looks like over the next 90 days or year. And that really is going to help the bank to be in a better position to increase a line of credit for you as you continue to grow. It's hard to walk in if you got $1 million line of credit and to walk in and say, we're starting a new contract on Monday and we need a $10 million line of credit. That's a difficult conversation. We may get there, but it's going to require some work. But if you're looking out and really what your pipeline looks like, what you're selling, you're really assessing what your percentage is in terms of wins, or what you think the percentage of a probability of a win is. A lot of times we'll go out and we'll give you an increase subject to the award of a contract that you think you're going to win. And so I think if you can just be upfront about those conversations and really focused on making sure that there's an open dialogue back and forth between yourself and the banker, that's really going to go a long way.
Interesting listening to you all talk, because I think some people who've heard this before, where some people are reluctant to go talk to their banker because they're worried the banker will tell them how to run the business. And I can assure you that is not, as everyone's laughing at this. If a banker thinks they can run the business better than you, they're not going to give you money in the first place. So it really is a resource, a sounding board to get advice. And with all of these individuals, but also these institutions on this call, that is not how they're going to look at it. So you shouldn't be reluctant to bring that up. Kind of shifting gears and moving toward growth. We've talked about startup companies, but obviously, as the saying goes, no one wants a 2-inch drill bit, they want a 2-inch hole. So the banker's role is to help companies grow. So maybe you can talk a little bit about how you all do that, both from the standpoint, hold off a little bit on acquisitions, but from the standpoint of executing on those large contracts, like Marcus said, that $1 million to $10 million, but also even getting that larger contract, as everyone knows, you have to demonstrate what the FAR calls financial capability in order to get the contract. So I'm sure you all are very adept at all of that. And so, Emily, you want to talk a bit about how you all handle that?
Yeah, absolutely. And I think Marcus encapsulated it really well on that, like frequent conversations with your banker on discussing what the trajectory of the company is going to be. Like if you can have quarterly touch points or even more frequent, the banker can really be in tune with the direction that you're heading. And then you can take a collaborative approach that, I have these 5 contracts and I have a 75% fee win. And I think if I get 1 or 2 of this is where I'm going to be. It really enables us to act quickly, because if you have a line of credit that's 1 million and to Marcus' example, you want 10 million or you want 5 million, right? We want to start that process so that you have the capital you need when you hit the ground running, because as I'm sure many on the call know, once you get notified of the award to the time that you start the work, it can be pretty quick. So being in constant conversation with your banker on those opportunities can help us be agile, especially with those increases.
Terrific. Geoff?
Yeah, I mean, these two have done such a great job already at the tail end of the last question and Emily's response. I just say constant contact. The quicker you get in front of us, the faster we can build a product or a structure for your relationship that lets you grow based on what your expectations are. Whether that's contingent financing and lines available, as Marcus denoted, based on potential contract wins, your pull through rate, what kind of financing makes more sense. If you're going to have something that may need a very heavy loan to value per se, let's look at an SBA product, understand the lead time there so we can get to execution there. And if bridge financing is needed from the bank, before we get to that, let's talk about how we do that and how we structure it, giving you some flexibility there to get your needs done. So just let us be a part of the dream that you're living, because as Ed said, we're investing in these relationships, right? We want a return on that investment. Certainly that's how we make money and thrive as institutions. But the loans and the products that we arm you with are because we believe you're doing something tangibly or intangibly or both that we believe is of value. So let us help you do that and really do the best that we can to aid you in getting the best return for yourselves. And the easiest way to do that by far is to communicate your expectations and your growth, and then let us help you build how best to fund that.
Marcus, you want to add something to that?
Yeah, the only thing I would really add to that is that as you continue to grow, as your line size grows, your need for line grows, there are some complexities that start to get into that. When you're a startup, we're very reliant on, who you are, personally, what your balance sheet looks like, what your experience looks like. The more, you grow, the larger your organization gets, the deeper your management team gets, the less it's relying on you. But we also start to see, as your line size goes up and you grow that management piece, that there are more covenants that get in place. There are, more outside things that you need, field audits and requirements in terms of the type of financial statement, a tax return versus getting reviewed or audited financial statements. And I think those are some things that I've seen over the years that, if somebody's not prepared for that, they're not having that conversation, they get surprised by, oh, well, wait, I'm going to go from, X number of dollars to Y number of dollars. And now you're asking me to step up in terms of financial statement reporting, in terms of, the type of external exams that have to happen, and there are expenses that go along with that. So you just want to make sure that conversation is happening, so that you don't get a surprise to going back to my earlier point, to go from 1 million to 10 million. There's other expenses that go along with that, and you just want to know about them. You want to be able to build those in. They're not bad things. They're there to help you, and they're there to help us to be more comfortable and quicker in response. And so just understanding what those parameters are up front are very helpful.
That's all great stuff. One thing I hope is coming through just occurred to me in using the It's a Wonderful Life analogy, that all of these bankers are more George Bailey than Mr. Potter. So these are people who are wanting to help you grow. And by the way, there's nothing that makes, when you get into banking, there's many different reasons, but the least experienced bankers have dealt with, one of the things that makes them the happiest is helping a company grow. There's a huge amount of satisfaction in that. So take advantage of that sentiment. Shifting gears a little bit, there's probably people on this call who also want to learn about acquisition financing. There are a lot of opportunities there. It can be a great outcome. It can also be not a great outcome. So maybe go around the table here, Emily, and talk a bit about how you guys look at acquisitions and acquisition financing.
Absolutely. Acquisitions is some of the most exciting stuff, I would argue, as our jobs. And I'm not brave enough to start my own company, so I was laughing at what you were saying. I like to be entrepreneurial adjacent. So to be along the ride for those contract wins and those fast line of credit increases or some pursuing an acquisition is really exciting. So there are different options available to you should you be considering inorganic growth via acquisitions. And there's, of course, the traditional bank financing, but there's also SBA financing. So when you have a target in mind, or before you have a target in mind, really, because your banker can be looking out for you, they have a whole portfolio of government contracting clients and having constant touch points. We're saying, okay, what's your plan? Are you looking to buy? Are you looking to sell? So they might have an arsenal of companies that are, 2 to 3 years down the road considering selling and might be able to be a matchmaker of sorts. So, but within that collaborative conversation, if you're looking at size of targets, especially when you're getting the financials, like, again, not to beat a dead horse, but like get those in front of your banker early, because what they can do is they can help you strategize on the structure, which you can mirror into the LOI to put in LOI something that you can stand behind. So actually just helped with an SBA 7A term loan to acquire a company. And some of the things that we helped collaboratively on the front end to look at is, all right, can we get behind this acquisition? We're looking at the contract backlog. Is there diversity? If there's not, are there other mitigants? What's the runway? Did they just sign a recompete and they have 4 years of runway, or are most of their contracts coming up next year? And then also, like, what are the combined synergies of the company? So what's the cash flow picture going to look like? Am I better served by a conventional loan with a shorter term, or could I utilize the SBA to make up for a collateral shortfall and potentially increase the term of payback? So there's a lot of different tools in the arsenal to make these acquisitions happen. And so it's just about kind of having that conversation, explaining your priorities, and one of which being like how much cash you want to put into the acquisition, right? Because if you're utilizing an SBA 7A term loan, you're going to be putting less cash in than if you would do it conventionally. So all good things to think about, and definitely an exciting time for a company.
Yeah.
Yeah, just a couple other additional things. We talked about this at the top of the call. As you grow, and certainly in an acquisition environment, use the right folks across the board here, right? Use a member of council who has expertise in the GovCon space. Use an accounting firm to help you with financial statements projections who has expertise in the GovCon space, right? Don't just use generalists, right? As a bank, that we get a lot more comfort when we're looking at our other service partners who are part of that rest of that stool that Marcus talked about. We get a lot more comfort when you're using specialists. And to Emily's point, know what you need, know what your capital stack is, who your acquiring's capital stack is, understand what kind of financing you need to make the deal a success. So maybe you need more money up front because it's a contract heavy business, maybe not an asset heavy business, and you need a longer duration to feel like you're going to have success, but the business plan is fantastic. Or maybe you can go the traditional financing route where there's going to be less proceeds and a shorter maturity, to Emily's point, but the way that your businesses are combining, maybe that's okay, and you want to get rid of the debt as quick as you can to then maximize the go-forward capability of the business. So have those conversations with us. Tell us about targets. Tell us about where you want to grow in contracts. If you're seeing somewhere that you think you can be successful for a certain department of the government, and by acquiring somebody who's there, that gives you a leg up, let's talk about the best way to finance it and the best way to get you there. And then, like Emily said, and like Marcus has said, let's build what you need to be successful. And again, going back to everything we've talked about, get in front of us as you're even mulling these over. Maybe you don't even have a company yet. We have companies who are in every phase of growth that we work with. Maybe we know of a company who would be interested in having a conversation where there's tangential opportunity. So just, again, the more you want to talk to us, the more we're willing to, and we can obviously help you in every phase. And this is one where lean heavily on your partners to make your deal a success. Because I promise that the alternative, the cost that you may see up front to get an acquisition right, most of the time the numbers aren't necessarily the factor here. It's execution risk. So make sure that at the front, you're eliminating as much of that as possible, and you're putting it on your management staff that you trust in to execute, and you're not worried about your ancillary partners such as ourselves, lawyers and accountants. You want to have that sewn up and not worry about that.
That's really great advice. Marcus?
Yeah, I would agree 100%. You know, again, lean on your banker. You know, we've got contacts in the world of finance. You know, both on the M&A side, you know, and also accounting and legal. So if you're not sure who to turn to, you know, talk to your banker. You know, we usually have pretty good connections and folks that we're comfortable with in dealing with M&A. You know, and it is an exciting time. You know, when you get to that point in your business where you're either looking to grow by an acquisition or maybe looking to sell. I've seen both sides of that. You know, and so depending on what you're trying to do, your banker can help you. You know, we've helped companies go out and find independent valuations if they were looking to sell their company. So it's important to know who to go and talk to about that. If you're looking for an acquisition, you know, there's a lot that can be done in terms of structure. You know, and it's important to understand, depending on the size of your company and the complexity of your company and the company you're acquiring, what needs to be done. So, you know, we see everything, you know, for smaller organizations, it tends to be very owner-centric, you know, driven by the personality of the owner and the relationships. And so if you're going to make an acquisition on a company like that, you want that person to be engaged with you for some period of time. So we like to see a deal structured with some, you know, some form of the selling owner staying on for some period of time. Maybe there's an earn-out over a period of time to make sure that they stay fully engaged and help you transition those contracts. You know, for larger organizations where they've got a very deep management structure, that may not be as important. And so you get really, you know, behind the numbers of, you know, where are you going to get some efficiencies? You know, how does making that acquisition really help you? Does it get you into some new contract vehicles? You know, those are the things that we're looking at and things that we can advise you on as well. So I would say, again, you know, we have a vast, you know, to use an old term, a vast Rolodex of professionals outside of government contracting and banking that we can help point you to.
So thanks very much. So an acquisition will be transformative. It's either to the good or to the bad. And it's probably, for most small companies here, they may only do one. So if you kind of look at the aggregate experience of just 3 people on this call, you got a ton of experience. So it's unlikely that this group would not have seen something very similar to provide that advice. Why don't we, there's a lot of talk in the press right now, people read it about the banking environment and everybody's running around with their hair on fire and all that kind of stuff. Can we take a sort of a quick lap here and talk a little bit about the overall banking environment, mainly just to calm everyone down. So, Emily.
Yeah, I think we are in a great industry in the government contracting space. So we're somewhat insulated in some regards in that the government's a good payer. The government is always going to need these companies to be in the pack. So I think we saw a lot through COVID where we saw some major fluctuations in different portfolios, you know, your restaurants or your retail shops, the government contractors kind of stayed the course. And, you know, in some cases, some people were luckier than others, but to a certain extent, we're somewhat insulated from the overall macroeconomic environment. But I see in the spot that we're in from a lending perspective, you know, we all don't have our crystal ball, but we expect that rates are going to be decreasing over the next year or two. So it's something that is great to take advantage of, especially if you have a line of credit that's variable or you get an SBA 7(a) term loan and you're getting a variable rate on that. We will see that hopefully those payments will start to go down based on the variable interest rates to make things more affordable. And to that point, perhaps buying power for an acquisition is going to increase if debt payments are going to be less. So we look forward to kind of seeing how it shakes out in that environment, but definitely interesting times that we're in. I'm sure Geoff has a lot he can talk to on that.
I was going to say, Geoff, this is right up your
Yeah. So it's certainly been a very interesting couple of years in the banking environment, especially on a more macro level. Especially, you know, a lot of us, and you know, with Emily and Marcus on the call, speak of more macro side of things, because I think they're so much better on the GovCon focus, but especially in commercial real estate and all those other things where you're hearing about these bellwethers of issues and fear about, you know, will that tip the economy? What's the last chip? What I'll say just broadly about the banking industry is that we are in such a better position than we were in 08, 09. Regardless of consistent regulatory change and maybe to a certain extent, too much regulation. We're the most regulated industry in the world by far, right? As it relates to how many independent regulators we have, the amount of consumable regulation that we have. But we're in such a better position, the industry as a whole, again, from capital, with liquidity and ability to withstand some of these kind of more macro-based onslaughts that we've seen, whether that's geopolitical tension, whether that's the interest rate environment, cap rate issues in commercial real estate, and some issues around multifamily and office with vacancy. So I think that you can take comfort in the fact that, especially for the banks that are on the call, we're more regionally or community focused, and we set aside capital to serve you because you're in our communities. So that's where we're different than some of the bigger banks that you may deal with over time, is that we want to help you grow. We want our communities to thrive. That's really what our mandate is. That's it sounds like the cheesy community bank speech, but we really do believe that our best foot forward is to help everybody in our community succeed wherever we can. Whether that's GovCon, whether that's residential mortgage lending, commercial mortgage lending, we want to be a source of strength for everybody in our community. So I would say, don't worry about your banks, especially the banks on the call. We're doing everything we need to do to make sure we can still serve you. And we're still lending. Burke and Herbert Bank has not stopped lending in any facet of the bank. We may be a little bit tighter on credit. We may be looking a lot more in depth than we would historically in some of the areas, mainly commercial real estate and things like that. This space, to Emily's point, is well insulated, and with a strong guarantor and a strong company, we're very comfortable lending into this space all day long. So, your bank is still there for you. And if they're not for some reason, then maybe it's time to consider, a phone call to a community or regional based institution if you're not with one that understands your needs a little bit more intimately than some of the other institutions might.
Thanks very much, Marcus.
Yeah, I would agree. I think I was just having this conversation with one of the economic development partners here last week, and they asked about this question about access to capital, and I said, from a community bank standpoint, that is a media-driven narrative, and just we don't see that. I mean, we're out in the community. We continue to fund businesses. We had a great year of loan growth last year. We're looking for another one this year. We're out in the community trying to continue to put capital out and continue to grow business in the economic industry here in whether that's just in Northern Virginia or even a little more broadly. But we see great access to capital right now, and so I think a lot of that is being driven by the media. Rates are up. I said earlier, I made my first government contract loan in 1998. We were lending at 9% back then. People were borrowing money, and businesses were doing just fine. We've had an extremely long, low trough of the cost of money over the past 20 years, which is unusual. If you look at the life cycle of the economy, that we've been in a really low tranche, and so people got used to it. But you can adjust your business model. Everybody will be fine. We can continue to lend money at 8-9%. People can continue to borrow. Rates will probably go down, and at some point they'll go back up. And there's variability in that. You can just adjust your model to it. If you got a sound operating company, you can work your way through those things, and your bank will work through there with you. And I think, to Emily's point, the government contract space is great. Unlike most operating companies, you've got what your source of revenue is. You pretty much know how much it's going to be. All you're doing is figuring out how many days it's going to take you to collect between the time you finish something and when you bill, when you're going to collect those payments. On occasion, obviously there's some talk in the news about perhaps a government shutdown on Friday or the following week. We see some of those things that make delays. Again, going back to our earlier points, we'll keep beating the same drum. Communication is so important because we understand those things. We don't have our head in the sand. We understand that those things are going on, and when they do, and we've seen them in the past, we work with our government contracting partners. You may loosen the terms in terms of what accounts receivable lending looks like. In terms of typically you have a certain number of days of receivable that you can use to borrow against. We may increase those, or we may extend small lines, knowing that you're going to get payment that may come 2 weeks or even a month later. But we can work through those things with you.
That's terrific. And I will say we love all banks in Republic. We are Switzerland when it comes to banks. But for smaller companies, startup companies, going to a community bank or regional bank versus one of the large, huge national banks, we always say that probably makes a lot more sense. You're going to be able to actually meet a person, get to know them, and credit decisions are going to get made more locally than often some other offices. That's not a criticism of any large banks. Everybody is set up to serve kind of a different type of customer. We have a little bit of time left. We do have a question, so I'll paraphrase the question, but this is a small business owner who won their first government contract, went to their lender, and the lender said, gee, that's not really a government contract because you're a subcontractor, so it's not backed by the government, which caused, I gather, a little bit of distress. But open up to the panel. Anybody want to pick that up and sort of describe how that would be seen differently? I'm sure there are different advance rates associated with it. So whoever wants to jump in on this one can pick it up.
I mean, I'm happy to jump on that. Yes, there is a difference. We do differentiate between a prime and a subcontractor in terms of advance rates. But, I would disagree with that analysis somewhat and say, gosh, even if you're a subcontractor, we still consider it a government contract. We just, our advance rate may be slightly less on a subcontract versus a prime. So a government contract is still a government contract as far as I'm concerned, and that's how we underwrite them.
Yeah, I agree 100% with that. We're really looking at the end customer. So I think what's vitally important in your space is you really have a banker that understands the government contracting industry and how it works so that you can kind of communicate, because the way that the government contracting industry is working is going to be different from any other one out there. So, just make sure you have an advocate in the banker that you're talking to that can really tell your story.
Yeah, it's definitely not a non-starter. I think we all look at it the same way, even if you're a subcontractor. To Marcus's point, we may have in our credit guidelines, we may have a lower advance rate as the base for a subcontractor versus a prime contract. But that doesn't mean we're not willing to help finance the obligation, nor would we look at it in a non-government light. We're still going to look through the subcontractor contract to see what the end use contract is and then make a determination from there. So I think that, again, just you're kind of highlighting the importance on the call too of relationship-based discussions with your banker from a question standpoint is they should understand that within the conversations that you're having and be able to articulate to you, hopefully, that, that's not a dead on arrival financing opportunity. It just may be treated a little bit different from pricing and structure and advance rates.
We actually have our portfolio is about 30% subcontracts, and it does depend a little bit who the prime contractor is. But generally, any prime contractor that's doing that is somebody who we feel comfortable if it's a government contractor as well. Happy to answer any other questions. We do. One thing I do want to point out too, I'm not sure, I'm assuming that there are some people on this call who are not in the kind of DC metropolitan area. And one of the things that I hope everybody has figured out is that the banks in this market have dedicated government contracting teams. So to the last question, they absolutely know. In fact, they're going to know who the prime contractor is. I mean, it's a very unique perspective. It's unique underwriting. And so it may be, if there are those who are not in this market, it may be one of those situations where your local banker, who you know well and hang out with, just isn't adept at doing this and should talk to one of the bankers on this call. Each bank has different rules about doing things outside of market, but certainly a call. And if for some reason, this is absolutely true in this marketplace, everybody is so helpful. If you're talking to one of the bankers in this call and for whatever reason they can't finance it because it's out of market or something like that, what they will do is help you find financing. And that is really important. It may be unique in every other industry, but relatively new to this industry, it's remarkable how people band together. If there aren't any other questions, maybe go. I think we have about 2 minutes left. Just go around the table real quickly. And if everybody could do one super successful story, don't name the company, and then one absolutely horrible train wreck story. Anecdotes are always fun. So we got 2 minutes around the horn. Go, Emily.
All right, no pressure. So I'll share this one example really quick because I think it's cool to show how accessible owning your own business can be, even if you aren't right now. So recently helped 2 individuals that had a lot of government contracting experience, but were not business owners themselves, by a company, larger company, and there was some structuring involved. But to be able to help these 2 individuals achieve their dream through the 7A program, it really shows that you can put these dreams into reality and you can get the financing to help you. It's not far-fetched. These individuals were extremely, like all the things that we highlighted in the call, extremely communicative. They were able to use their resources. They were able to be very transparent so that we were able to structure it in a way where they could make their dream come true. On the other hand, I would say an example of maybe a not so good one is that one that comes to you. I think almost Marcus kind of gave the example earlier. So they have a small line in place right now, and they say they come to you on a Friday and they say, I want the funds on Monday. That's tough to do. And I don't want to give you all my financials right away, right? You got to equip the bankers with the information and the time to advocate for you. And we want to talk to you. We'll talk to you all day. We'll get in front of that early for you. So,
yeah.
Yeah, I've got a sounds like a very similar customer. This is, in this space definitely where they had a small business and they were very successful thus far. And, we had a great relationship with them and we were willing to follow them into a new part of contract and they hadn't been in before in an acquisition and help them get there again through the SBA financing that, and if you don't have a relationship and you're looking at a new company that comes in and says, hey, we're buying something in a different business than what we normally do our contracts in. That's hard because you got to get up to speed on the current business and then the new business and how well they're going to execute. And without that character component and that relationship component that you form over time, that may be a hard ask for a lot of banks if that's your first introduction to the company. But we were successful in helping them follow that company. They're doing great. And, those are the type of stories that I like to see. On the other side of things, I went through a long discussion over the last couple of weeks with a potential customer that, had some foreign receivables that were secured by foreign letters of credit and couldn't really explain the situation for how they were comfortable with a lot of those different intricacies that happen when you're dealing with foreign governments and foreign institutions as a US-based GovCon provider. So when you get into some of those super complex natures, we know how to run your business, but if there's a failure to articulate some of the intricacies and how we can get comfortable with the collateral and how you're comfortable with it, then it's really difficult to get over that as a credit impairment and quite frankly, just an overall relationship impairment. So articulating how well you know your business and how you're comfortable or saying, let me look into that and get back to you, taking that ownership of needing more information yourself in this discovery phase that you may end up with banks if you're looking for a new partner. That's big too, because that's a big character development to be willing to say, you know what, you're right. I need to spend a little more time in that process and let me get back to you. That's way better than, making something up or not really having an answer and offering some sort of alternative response.
Marcus?
Yeah, I think. I'll tell about one company that was both, a disaster and a success all at the same time. I mean, I had a company that I started banking back in 2005. It was 4 partners in the business. They got up and running. They were all vets, had some great connections and contacts. Started, all brought kind of different, piece of the puzzle. But within about 2 or 3 years, they really started to have some arguments and disagreements about the direction the company was going to take, and it really impacted their business. And one of the owners came to me and really kind of sat down, explained what was going on. We could start to see in their financials that there were things just weren't going as well as they had been when they first started up. And, we had a difficult conversation about where that company was and what the struggles were. And I always say, having business partners is like a marriage. When it's going well, it's great. And when it's not, you're calling divorce lawyers. And so that's not a good way to, end your relationship. And so we kind of talked through, what the struggles were, eventually identified, maybe the best way to move forward was to, for this one partner to buy out his others. And so over a course of about 3 years, we structured some financing for him to buy out his other partners. And I'll tell you that he just at the beginning of this year, signed an agreement to sell that company for, it's a mid 7-figure deal for him to sell that company now. So, it turned into a real success from what was a disaster at one point, 16, 17 years ago.
That's really terrific. I think our time's about up. I do want to share one story before we along these lines. And Marcus, you reminded me of it, but we had a customer a number of years ago. It was a woman-owned business, terrific person, had run into issues. but was in default on a bank line, home, all assets pledged, probably 30 days from going out of business. The bank was fantastic in terms, and by the way, this is another thing, communication with your bank. They know the problem, tell them the problem, you're not going to surprise them, and their instinct is to work with you if they believe you're really working through the problem. So don't assume they're just going to foreclose. Bank worked it out, paid it off for a period of time. We financed the company, took care of the payroll. The owner sold it 3 years later for $14 million. And lovely person. I mean, just couldn't be happier. So those stories are out there, but it's a great example of the bank doing the right thing, the owner doing the right thing, everybody kind of rallying around this individual. So I think our time is up here. Want to thank everybody again on the panel. Want to thank NVSBC for pulling this together and everybody who listened. I don't know if everyone on this call has contact information, but we'll talk to the folks here to get that out to everyone so that if you do have questions, everyone's promised to talk to you. So take them up on it. So appreciate that and hope everybody has a great day. Thank you.
Thank you.
Thanks, everyone.